So the uranium market absolutely melted up this week. We have been harping on this at the early stage investor for months now, right? Because we love unloved investment opportunities that are cheap and ready to skyrocket and give us life-changing returns. So the answer to the question, why is uranium absolutely ripping? Well, a lot of the podcasts predicted this, and it all starts with a spiking uranium spot price. So that's the basis for all this. That's why the stocks are just absolutely skyrocketing. So why did the uranium spot price skyrocket? Well, here's why prior guests predicted that the spot price would skyrocket. So first, let's start with Lobo Tigre, who gave us this explanation and prediction back on May 7th.
And the plants now need uranium. The plants being built now, and there are more of them being built than decommissioned. They all need uranium, no substitution. And you can't mine the stuff at the current price, not enough to matter. So in terms of buy low, sell high, early stage opportunities, just hands down, uranium has the best setup of any metal or commodity I can think of.
Here's Steve Penny predicting the spiking uranium spot price back on May 28th.
I do think we're early innings in this bull market. If you've got a longer term time horizon, I mean, that spot price, the bottom line, that price of uranium has to get to $50 at least. I mean, it's probably going to go much higher than that. And we're still down around $30. $30 is not enough to incentivize the new production that's needed to bring on all these nuclear reactors around the world. And there's only about 65 pure play uranium miners in the world globally. So it's a very small sector. These companies are going to need higher prices. So we're still early innings, but I think.
And for those of you that are wondering, you can find Steve Penny's portfolio and free newsletter at thesilverchartistnation.com. He has just done insanely well and really knows when to get into these stocks early, which is why we're just a big fan of his. You can also watch these videos for a more in-depth analysis of the uranium market, which predicted this run up. So we got Terry Papineau went all in on uranium 3 months ago. We got Rick Rule talking about the uranium market 3 months ago. Justin Hune, 2 months. Peter Grandich, 3 months. So just these guys absolutely nailed it, and they deserve so much credit for calling this. So as far as why it went up these last 2 weeks, these are the specific headlines that caused it and what is driving this. You have the Sprott Physical Uranium Trust. Okay. So far, I think they've stacked hundreds of thousands of pounds of physical uranium. And the Sprott Physical Uranium Trust is it's an ETF essentially that holds physical uranium. So they buy up pounds off the market. And so that is squeezing the already constrained supply of physical uranium, right? A lot of these guests have covered the supply crunch and the severe deficit that's already happening. Well, here you have a key catalyst and driver for squeezing even more supply off the market. Terry Papineau nailed this in this video.
So Sprott could actually be buying uranium weekly, daily, depending on how much money is flowing into the fund. And so this is huge. So that means that you've got someone now or an entity with means that's going to be able to scoop up as much uranium as they want or need, and as much uranium as is available. So that's going to put a lot of pressure on the uranium market, on the spot uranium market. And at the last bull market, the way it was played is you had some hedge funds and some financial players. What they did is they entered the market. They started buying equities first. Then they used their hedge funds or large amounts of money to start buying physical uranium to drive the price of uranium up, which drove the price of their equities up. So they were making money with the equities, and they were making money with the price of the physical uranium that was going up as well. So now with the Sprott Physical Uranium Trust, these hedge funds and these financial institutions, it's a complicated thing to go out in the market and buy physical uranium. You need to, get the agreements. You need to store it somewhere. You probably need licenses to be able to buy it. Well, now they don't need to do that. Now these hedge funds and these institutions have a vehicle in the Sprott Physical Uranium Trust where all they need to do is buy units of this trust, and they'll probably be coming in with heavy money, a lot of money, which is going to give Sprott a lot of money to be able to buy uranium. So this is, in my opinion, it's a complete game changer.
And here's the headline: uranium soars after Sprott massively upsizes its buying program by $1 billion. So it's just a major catalyst that we've all been waiting for, and it's here. And now you just have money just rushing into these stocks. Look at the URNM North Shore Global Uranium ETF, just surpassed $500 million in assets. There's so much cheap money out there that if there's any bullish news, any growth, money just comes rushing in. And it's just a beautiful thing, right? So you have the North Shore Global Uranium Mining ETF, a diversified basket of uranium stocks. In the last 6 months, it's up 52%. 1 month, it's up 48%. Last 5 days, up 13%. 1 day, up 11%. Absolutely unbelievable move there, but predicted, right, by several people, all driven by the spot price, which, if you can see here, look at that, just jumped up to 40. So it went from 30 to 40, 33% gain in a matter of a week or two. Just absolutely killer move. So here's the question, right? Yeah, great, it's gone up. What if you don't have as much as you want in it? What if you missed it? What if you want to get in? Well, we are going to figure all that out, right? So next week, I call it Uranium Week on the Early Stage Investor. We're going to talk to subject matter experts. We're going to talk to several people. I have 3 uranium-focused interviews already lined up. One of the people has never even been on the show. Very, very exciting. So we're going to ask them everything. We're going to ask about, Steve Penny, right? Tactical. How is he trading this? His timing is flawless. Really want to get his take on this. We're going to ask other uranium experts how far they think this can run, right? That's the ultimate question. Is it too late to buy? Is it too early to buy? When will the supply crunch even out? Because that's what we got to watch out for, right? When is the production going to ramp up and just, drown the market? That's a possibility. It's happened before. So there's these big frenzies in the uranium market, and what happens is, the price skyrockets, production ramps up, and the supply deficit goes down, and therefore and everything just crashes back to earth. And so, because of that dynamic, uranium isn't a scarce resource per se. So that means production can just get ramped up whenever the price goes up and people want to make some money. And so what happened previously was Kazatomprom kind of flooded the market by just pumping out production, and that hurt, right? That hurt the price. But here, Trader Ferg, one of my favorite analysts of all time, what a great early stage investor. He loves finding these beaten down sectors. He retweeted this post from Art Hyde saying the chief commercial officer at Kazatomprom gave out their plans for production, right? So Kazatomprom plans to maintain 2023 production at a similar level to 2022. So essentially what this means is, and this is the kind of the analysis, right? They're not ramping up production. They're not doubling their production. They're not trying to squeeze the market and crush the market like they've done before. So it's a whole new dynamic. We're going to be picking the brains of some brilliant people, very same people who called this. We're going to try to figure out what is going on. So make sure to stay tuned. I will see you next week. Very, very exciting. This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.